And now we'll delve into the fixed income market, where the overnight lending rate expanded by 58 basis points to 14.1% in the absence of any significant funding pressure on the system. Activities in the NTB secondary market were mixed, but with a bearish tilt, as the average yield expanded slightly by 1 basis point to 3.9%. According to the curve, the average yield contracted at the short by 2 basis points, and as participants demanded the 91 DTM bill, but expanded at the mid-segment following profit taking. However, average yield was flat at the mid-segment. The Treasury bond secondary market turned bearish as the average yield expanded by 2 basis points to 11%. Well, joining us now is John Kanayo, Head Research and Strategies, Imperial Asset Managers Limited. He talks to us on what happened at the fixed income and money market yesterday. Thank you for joining us, John Kanayo.
Thank you, Polandi, for having me.
Now, help us make sense of the activities in the fixed income market yesterday.
Yes, thank you once again. Across the market, money market, treasury bills, almost, and fixed income, market was mixed. System liquidity closed yesterday at negative region. It closed at 74.85 billion in negative. This was because of the auction that was done on Wednesday and was eventually settled yesterday. Worth 173.48 billion. This helped to reduce the inflow of NTB maturity worth 153.03 billion. Because of this, money market rates went up. Overnight rate was up by 8 basis points to set up 14.08%. Open repo rate was up by 70 basis points to settle at 13.67%. Open market, like you have pointed, activity was low, and rate closed unchanged. Average yield closed unchanged to settle at 4.3%. Treasury bill was relatively low and weak. Average yield settled unchanged. Was unchanged to settle at 3.87%. At the bond market, there was mixed activities. At the short end of the curve, average yield was up by 30 basis points, obviously because of sell-off on January 26, 2026 maturity. That's 5 years YTM to date. Talking about 5 years maturity from this date. This bond was up by 51 basis points. At the mid-end, activity was weak, and yield was unchanged. At the long end of the curve, yield rose by 7 basis points because of sell-off on January 42 maturity, 2042 maturity. It actually went up by 27 basis points. Overall, across the bond market, average yield rose by 5 basis points to settle at 11.53%. If you look at the market, after the MPC resolution on Monday, at the NTB and OMO has been relatively quiet, other than the auction that was done on Wednesday, where we saw spot rates.
John, okay.
And 354 be going up. The market has been largely quiet at OMO and Treasury bill. Bond market has been going up at the short and long end of the curve, trying to adjust to the MPC increase in NPR rates.
So tell us, what's responsible for this quietness that you've been talking about, the quietness at the open market operation, the OMO, considering the average yield was unchanged at 4.4%. Why is it so?
Okay, the market is, across this market that we're talking about, it is driven by liquidity.
Okay.
When there is liquidity means funds available for institutional players to play with. When there is positive liquidity, we usually see uptick in activities in money and open market, because liquidity has been largely low and sometimes slip into negative region. We have been seeing a quiet activity in OMO and money in OMO and the MTB market. I mean.
Okay. Well, across the benchmark curve, the average yield expanded at the short end. What do you suppose is responsible for this expansion?
Like I said, at the short end, average yield was up by 13 basis points. I said there was sell-off on January 2026 maturity. That's the 5 YTM from today. Okay. I said there was sell-off. That actually dropped. That actually pushed short end yield curve by 13 basis points.
Okay, so given the limited change to the drivers of the market, the fixed income market, what would you say is the outlook of the market in the coming days?
Today, the last trading day for the week, we expect, due to that system liquidity is in negative region, across OMO and NTV market, we expect market to be low, and average yield in this market should be unchanged. At the bond market, we expect at the short and long end of the curve to continue to see increase in yield in response to MPC increase in MPR. That we expect the average yield across bond market to move up between 3 to 5 basis points again.
Is that a good sign, though?
Is that what?
Is it a good sign? Should investors be excited about it?
It is because investors look at these. When yields are higher positions, it attracts them to buy into it. When we see by the time they would have achieved their target in place of yield, that's when we start seeing sell-off, which usually drag it down.
All right, that's a fine place to leave it. Thank you so much for your analysis this morning, John Kanayo. John Kanayo is Head Research and Strategies, Imperial Asset Limited. Thank you for your time on Business Breakfast.
You're welcome, and thank you for having me.
And have a productive day.